Mahesh Patil joins us, co-head with Birla Sunlife. He joins us live in our Mumbai studio. Mahesh, good morning. Thank you for joining us. Thank you for coming to our studio all the way.
Good morning.
It's been a good July. Do you think that summer correction, that one-time adjustment, that cleanup in the market is over?
Yeah, it's been a good month. More importantly, I think we've seen the broader market started to now participate because, I mean, the Nifty was always good. But the pain for real investors was there in a lot of the other stocks. So I think, as we said earlier, also we've seen this quarter as the earnings season has come in, we've seen a lot of companies have reported decent numbers, and many stocks which had corrected because of concerns, so-called macro concerns which were there, which impacted the broader market. I think some of the macro concerns still remain, but I think they have eased off a bit. Oil prices are no longer threatening to go above $80 or so, and the valuations in the broader markets had corrected to very good levels. In fact, we have been saying that there is now good value which is there in the market in some of these stocks. And we've seen a reaction post the quarterly numbers. Companies which have reported good numbers, the stocks have reacted very positively. So I would say, I think with Nifty breaking out, despite all the concerns what we had, no one would have thought that you would see a new high at this point in time. I think the market, at least with earnings support coming in, I think should be able to hold on. But again, I think the big rally in some of the few names which drove the market, I think that divergence is something which you should start to now kind of mean revert back. And the other stocks across sectors, I think, but more stock specific, I think which is what will drive the market from here.
When you say that there is value in the market, give me an example of what are you referring to. The reason why I'm asking you this question is because
Sure.
I spoke to senior fund manager yesterday, and he told me, I'm going to quote him in verbatim, भैया डाबर में वैल्यू है, 20% कंपनी में अगर ग्रोथ आता है तो डाबर में वैल्यू दिखता है. So how would you define value in this market?
No, so one is that clearly if earnings surprise, okay, the stocks would appreciate to that extent. But when I refer to value, means companies with fundamentals remaining unchanged, okay, and earnings we've seen stock correcting by 20%, 30%, even 40%, right? So clearly, what was expensive 6 months back is now available, say 30% cheaper without any change in earnings. That really is a sign where you would want to look at those stocks, and also comparing to the historical levels, okay, how the valuations have been. So I think we've seen that value emerge in a few stocks, and so it's a good time actually to, a year back we had challenge. Remember, we were in the same show and we discussed how do you deploy money, where do you put the money, right? I don't think the challenge is as much. Obviously in the large cap names, some of the names they have are the consumer names. The valuations have really gone beyond to standard deviations. But in the broader market, we are seeing now opportunities where we can see a bottom up and reasonable upside.
Oh, so bottom up is what you're betting on.
Yes.
So I would guess that would also include the likes of PSBs, aviation, which is taking a knock perhaps because of crude. Are those the pockets you're looking at?
Not necessarily.
Or are you sticking by with the expensive growth visibility story?
So not necessarily trying to play contra. Where earnings visibility is not there, there's some concerns. I think it's not a time to do that. But clearly where there is a right balance in terms of our outlook, in terms of earnings growth, improvement in earnings and the valuations. So, it could be across stocks. Again, it's stock specific. Within the same sector, you'll have certain large cap names which could be expensive, other stocks which could be much lower. Just take an example like BL, for example. The stock was beaten down by almost 40%, right? Earnings were fantastic. No change in the earnings outlook, or the stock has now rebounded. So, I think there are areas where across sectors, it's not only in the pockets, but across, whether it is consumer discretionary, whether it is in the metal space, whether it is in the oil and gas sector. But more so, I think in the PSU names, we have seen a lot of correction across the board. Probably the sentiment has been negative because of a lot of supply of paper. But I think earnings number coming, I think we see the stocks rebounding pretty sharply from those levels.
I was just looking at some data where we were highlighting how this has been a jubilant July.
Yeah.
This has been the best performance in July in the last 10 years. I think the last time we did a great resounding 8% return was in 2009, and after that last time this year have been very good for July. Is that primarily coming on the premise that we are seeing earnings pick up for good?
Yeah, I think it's a combination of that because again, this earnings was supposed to be a good because of the base was very favorable, and after couple of years of pretty bad earnings disappointment. We saw that partly in the fourth quarter, but this quarter is where we've seen improvement. So I think that is clearly providing support to the market. And again, even in the banking side also, which had seen a lot of pain, a lot of the corporate banks where we've seen large correction in earnings and in the fourth quarter, I think there is a sense coming in that things are worst is behind us, slippages are coming down. So that sector is also starting to really come back. So which is again a large weightage in the benchmark. So I think it's a combination of earnings trajectory picking up, and also the macro, at least the growth, overall GDP growth, if you look at the numbers, are indicating that we should sustain the momentum in the coming years. I mean, irrespective of what happens, there are concerns about elections and stuff like that. Yeah. But I think economy, I think growth is clearly underway, and it's on a pretty decent footing.
I'm looking at your mid-cap fund, Mahesh, and you know, you've been able to do a lot of damage control, which is encouraging to see. From a year-to-date perspective, the fund has lost 10%, you know, in complete honesty, but you have the 1-year, 3-year and the 5-year returns, which are still holding steady. How are you managing your mid-cap fund in the wake of all the unwinding pressure we've seen in the broader markets, and how do you hope to now generate higher returns if there's a turnaround in the works?
Yeah, so in the mid-cap fund, it's important to really ensure that you do less mistakes. So fortunately, we have stayed out from some of these names, okay, which have seen corporate governance issues and sharp correction. So internal process and philosophy automatically weeds out some of these stocks. So I think we have avoided some of the large mistakes, which can be really, can really be shattering in terms of the overall portfolio. So I think that's the first thing we have done. And again, it's mid-cap is again a pure bottom up, right? So stick to your convictions, and we have seen significant correction to our conviction holdings in the last 6 months. So at that time, it really shakes whether our assumptions on the companies or what we have bet on, whether it is right. But again, that it goes back, going back to the drawing table, going deeper in the companies, getting more confidence in terms of the outlook, and sticking to your conviction. And things bounce back pretty fast. We've seen in the mid and small cap space, the recovery also in stocks can be equally strong. You have to be there. So I think really focusing on companies, betting your bets where your high conviction is, and staying away from some of the mistakes and companies with poor corporate governance is what we have done. And I think that's a strategy which will continue to pay us dividends going forward.
Mahesh, last 5 years, if you just took a bet on the retail franchises, which is that you took a bet and you said, look, I'm going to bet on a HDFC Bank, I'm going to bet on a Bajaj Finance, I'm going to bet on not an Axis Bank, but I'm going to bet on an IndusInd Bank. Retail franchise largely, you've made serious money. Will that trend continue? And do you think retail franchises may grow, but the stocks may not grow?
Yeah, so I think to answer your first question, whether retail franchise will grow, I think the answer is yes. I think there is still enough potential and room to penetrate the market. In India, still retail, financial penetration is still fairly low. And looking at some of the companies, talking to them, I think there is enough opportunity which is there. So there's no doubt that the retail banks and the retail book will continue to grow. The question is about the valuations, right? So some of these stocks have been pricing in because of, again, we've seen a period where there has been divergence in the banks, also the corporate banks and retail banks. So there was more flight towards retail banks, which were more predictable, more certainty of earnings coming in, and valuations have gone at a higher level. I don't know whether the valuations will correct, but I think probably some of the corporate banks, okay, there could be some risk also over there. I mean, it's not going to be but if you want a steady compounding growth with a moderate return, I think retail banks still would fit that bill, and they're going to deliver that. But if you want to take some higher risk, looking for higher return, then I think it's time that over the next 1 or 2 years, you could see some higher returns in the corporate banks, provided you put your bets right over.
I'm going to mark some stocks here, and God knows what's happening in India Bull Ventures. I must confess ignorance on this much. All I know is that they're trying to monetize on loans based on technology platform, and the data what they've been giving us and what numbers what they've been reporting is great. So I'm going to first mark the intraday graph of India Bull Ventures. Here's a name which will make Mahesh Patil very happy, because I know for sure it is part of his portfolio. At least some schemes have Dabur in their portfolio. And Mahesh, if my memory serves me right, and when I speak to some common friends, they've told me that you bought into rural themes off late. When I say off late, 2-3 months ago, right?
Yeah, I mean, see, again, we've been positive on the consumption.
But you've added to in Hero MotoCorp, you added to in Dabur, is what I understand.
Yeah, so I think rural theme is something which we had positioned again, not now, but say around 6 months back, again after the elections. And we've seen after poor monsoons, things picking up. Rural wages
after
are still.
Which election? Because
sorry, not elections, after the budget, sorry,
okay.
after the budget,
okay.
where there's a clear focus from the government in terms of giving a push to the rural. And so we were, again, rural wages and incomes were also dismal, and we're seeing some signs of improvement over there. So clearly that's the theme which we are playing, and instead of paying it directly, okay, through some of the fertilizer companies or seed, which is not a meaningful play which you could really deploy, it was better to play through the consumption story, both consumer staples as well as consumer discretionary. And we've seen that across this quarter itself, the volume growth, which was pretty subdued. I mean, some of these stocks had done well despite that because of margin improvement, but volume growth was really lacking. So, which we've seen that coming through pretty well, and especially with consumer names which have a larger footprint on the rural side. And also the competitive intensity from some of the players like Patanjali and this thing has also eased off a bit. So, that has also probably contributed for companies to really expand their reach and continue to grow there.
You know, 2 months back, Mahesh, if we were chatting with just about any and every market participant, they were of the firm belief that mid-caps are going to take a long time to recover. Maybe the price damage is all done after that 20-25% fall that we saw year to date, and we've made up as well for some of it. But they said there is going to be a time-wise correction which is going to play out. Now you're looking at a scenario wherein almost half of those losses have been covered in both the mid and the small caps, and some of those individual names within that pocket are also sitting at life highs. The Nifty is already scaling at a fresh peak. We're almost at 11,400 already. Do you think that time-wise correction may not really play out within mid-caps and they would recover sooner than what the market anticipated?
You see, it's very difficult to say when the correction is over and when the stocks will recover. In fact, a month back itself, we had come out with our communication that a couple of months back that this is a time to start looking at small and mid caps and building up a portfolio, because you can't really time. But once you know that there is definitely some value which is there, and the longer term outlook is looking good with economic recovery, you will see some of the mid and small caps earnings growth coming back. So we had said that, okay, this is a right time. When that time things were pretty negative on the mid and small cap space, slowly start allocating and building exposure over there. So I think, again, anybody investing into a small and in the mid cap space would obviously have at least a 3-year horizon, because the volatility there is much larger. And given that even if there is a correction, if it consolidation continues for some time, the recovery, I think, I mean, the way the stocks move in the small and mid cap space, the beta there is much higher than some of the larger cap names. And so I would say that I don't know whether the consolidation and this thing is over. There are certain headwinds which are there. You have elections. People might not take a very aggressive view. But if you take a 2-3 years view, I think mid and small cap earnings growth, at least for us in our portfolio, we are seeing it much stronger.
But we've seen a 4-year long bull market in mid and small cap stocks. We've not.
But that was despite earnings. So that was liquidity purely which growth, and we saw everything went up. So I think it will be more discerning this time. So the stocks which will go up, we won't see stocks with poor fundamentals or poor corporate governance issues. They won't participate because liquidity is not going to be as strong as what we saw in the last calendar year, right?
Fair point. You know, Tanveer and Asha, that's the strange part about the market. We are at an all-time high. Mahesh's NAV may not be far away from that record high you must have hit in Jan or Feb. I don't track it that much, so I must confess it. But it's not feeling like a bull market. You know, you don't walk into office and get this feeling that everyone is excited about participating in the bull market. And that's how markets are. That's how bull markets are made. They climb the wall of uncertainty, they come down on the ray of hope. Unfortunately, there is no ray of hope right now. Everyone has 1 or 2 or 3 stocks in their portfolio, including best of the funds, pardon me, no pun intended here, which has taken a whack.
Yeah,
sure. So it's a crazy market, isn't it?
Yeah. I mean, it's a crazy market. It's a tough market for us also as fund managers, because when a few stocks run up and the broader portfolio is not really responding to that, and that's where your conviction and your true resilience gets tested. And even for investors also, it's been a painful period. I mean, while the market has, I mean, as you rightly said, Nifty has touched a new high, the experience has not that been great. But I think these are times we see this divergence which are there, which normally tend to mean revert, and we are seeing that trend, I think, reversing now, which should be good in terms of overall portfolio or performance also, which was a big challenge in the last 1 month beating the benchmark. I think that should now come back on track.
But you didn't see any redemption in your mid and small cap schemes year to date?
No, we haven't seen any redemption because, as I said, we never really chased and really tried to take very high risk in the small and mid cap funds. So we haven't seen any redemptions. We have heard about
What about fresh allocations?
Yeah, allocations have been slow. So that's very clear. I mean, the last 3 months, overall inflows into the mutual fund industry has been slow, and more particularly in the small and mid cap space, we haven't seen any major inflows.
Okay, you know, on your frontline fund, I was just looking at the portfolio. While the fund is done its bit, you know, 1-year return is about 6%. Year to date, the return is 1%. At a time when the index, and we can bring up the Nifty for you, has, you know, pretty much held ground and outperformed the broader markets.
Yes.
What I'm intrigued by is the portfolio constituents. You have an HDFC Bank, which is fine, but you have an ICICI Bank and a Yes Bank rather than a Kotak Bank and an IndusInd Bank. You have an ITC versus an HUL, L&T, which is despite numbers not performed, and from the technology space, you have an Infosys versus an TCS and an HCL Tech. So give us the thought process here, because it seems like you're not taking the number one slot when it comes to the leaders in every sector or the outperformers in every sector.
Sure. So I think our philosophy has been to, when you're buying a stock, it's a combination of what kind of a growth we are looking at and valuations. So, so there has been a lot of focus in terms of relative valuations in adjusting for the kind of a growth outlook we have for individual stocks. And that has led to what kind of a positioning which we have in individual stocks across the sectors. Unfortunately, in the last 6 months, we have seen that some of the expensive stocks have become more expensive, and they have been the reason for the outperformance for the benchmark. But I think sooner or later we see a reversion, mean reversion of this coming back to the averages. So I think our focus, more value consciousness, okay, more focus on value or relative value. Our philosophy has been growth at a reasonable price. So
would you think your fund would have done better in terms
surely.
of returns
had
there been you know, a TCS in the fund, NHUL?
Yeah. So at least
so
looking at
the
looking at the last 6 months, I think clearly we missed out on that if we had in the stocks. But I think over a market cycle is what we have seen. If you buy the stock at the right price and value, I think that would give you a better return. So, but last 6 months has been a challenging period. I would admit that.
You know, it's such a tricky call. You know that growth is there, but you're not comfortable with valuations, and sometimes when you look at outperformance in a D-Mart or a HUL or a Dabur or a Nestle, पे valuation कहाँ होती है? Does that entire it just changes the preamble of the way how classic fund managers are investing.
Sure.
So last question, and we'll call it my idea. We'll play it again. So we'll call it my idea. We'll give this the branding. So what is Mahesh Patil's my idea? What is your idea? It could be a theme. It could be a sector. It could be
preferably a stock.
Yeah. Whatever you like. So what is your idea?
No, so our idea, I mean, at least Fund House idea is that stick to, I mean, we are positive on the market, clearly. Our view has been positive from a 2 to 3. We are in a recovery. Play the domestic consumer discretionary as a space which has seen a big correction in this market. And I think as we see the benefits of GST and other things roll out, as per capita, we see in the per capita income now coming at inflection point. I think India is a huge opportunity. That's the sector I think over the next decade will continue to show pretty strong growth, and companies with good strong brands in that sector will give you good return irrespective of the valuations. That's clearly one theme which we are positive on. I mean, there are other sectors like rural themes which we talked about. I think that will continue to play. I think this year should be a good year, but it would have more legs going forward. So I think these are, and again, remain stock specific. I think this is an excellent market where we are getting stock specific. That is, if you are patient and willing to really stick out a neck and back your conviction, I think there's decent returns to be made at individual stock level, even from these levels.
I would have thought when I answered that, asked that question, the Mahesh would say, my idea is to buy Birla mutual funds. Appreciate it.
I mean, that's all obvious, right? I mean.
Okay, appreciate it. I'm glad you could join us.